Welcome everyone to today's podcast. It's fantastic to have this chance to sit together, listen, and share valuable experiences on our journey through trading and investing. This is not only a place to learn trading principles, but also an opportunity to discover more about yourself, a vital step for anyone aspiring to become a successful, sustainable trader. I've gone through my fair share of ups and downs in trading, and from that journey, I've distilled 9 rules that I believe are fundamental for that journey. Each rule holds its own value, serving as more than just advice. They're milestones that help you stay grounded and avoid going astray. Let's dive into each of these rules, not just to know them but to truly understand and feel their importance, for these principles will help you go further in this competitive trading world. Rule 1. Don't expect to get rich quick. This first rule might sound simple, but it's an invaluable lesson. Don't think you'll get rich fast in this market. While the financial markets offer opportunities, coming in with the mindset of making quick money can lead to hasty, risky decisions. Success in trading requires patience and a long-term vision. The legendary investor Warren Buffett once said, "Rule number 1 is never lose money. Rule number 2 is never forget rule number 1." This advice isn't just about capital preservation. It's the foundation of sustainable trading. If you rush into the market expecting instant wealth, you're likely to fall prey to unnecessary risks, losing both capital and potential. Remember, easy come, easy go. This rule reminds us that trading is a long journey where patience and determination are our best companions. Keeping this perspective will lay the groundwork for a stable, enduring trading career. Rule 2. Start small or with a demo account. When you're new to the market, start with a demo or cent account where the investment is minimal. This allows you to test strategies and familiarize yourself with the emotions of trading without facing significant risks. For beginners, trading with a small amount is the optimal way to learn and discipline yourself to wait for the ideal entry points, a critical skill for success in this market. Trading is like driving. You need to ease into it, getting used to the speed before accelerating. Jumping into the market with a large amount of money without adequate preparation can be dangerous. In sports, athletes warm up before stepping onto the field, getting acquainted with the conditions and preparing both physically and mentally. If you don't have a demo or cent account, I've left links below to help you easily open one and start practicing. Remember, don't rush. Focus on refining your skills and mastering self-control. Like practicing any skill, once you're proficient and disciplined, you'll be confident and ready to trade with a larger account. Rule 3. Choose one method and stick to it. There are countless methods and strategies in the market, and one of the biggest mistakes people make is constantly chasing the latest strategy, hoping to find the holy grail of success. However, an effective trading strategy doesn't need to be complex or flashy. The real value lies in whether the method fits your schedule, personality, and goals. That's what matters most. Once you've found a method that suits you, don't let curiosity or fleeting trends sway you. Successful trading is not about endlessly trying new strategies, but about consistency and persistence with the strategy you've chosen. Results will come when you truly understand and master one method instead of constantly jumping around. If you don't have much time like me, consider trading on a longer time frame, like daily trading. This approach allows you to balance your life without sitting in front of a screen constantly, leaving you time for other activities. Trading is a path to freedom, but many lose sight of their initial goal, getting caught up in the market's whirlwind. Let's avoid that pitfall together. Rule 4. Maintain absolute discipline. Discipline is the key to success in trading. No matter how effective your strategy is, it's worthless without discipline. In trading, emotions are the biggest enemy of sound decisions, creating invisible barriers that make you lose patience and easily break your established rules. Remember, trading is not gambling, it's a job that requires clarity, reason, and adherence to your plan. Every time emotions take over, remind yourself discipline is the only way to survive in this market. In reality, the most successful traders aren't the ones who know everything or have the most complex strategy. They are those who can control themselves, following discipline rigorously without succumbing to the market's temptations. Discipline not only helps you avoid reckless trades but also serves as a shield against emotional storms. Markets are ever-changing, volatile, and there will be days of successive losses. During tough times, discipline keeps you grounded, stopping impulsive decisions and helping you stay focused on your original goals. Rule 5. Review and record your trading experiences. One of the most important habits every trader should cultivate is recording each trade. Write it down not just to remember, but to reflect and understand yourself. This is more than just logging information. It's a way to gain an objective view of your trading journey, recognizing patterns and drawing valuable lessons from both successes and failures. These notes will become an invaluable resource. As you examine each trade, you'll start seeing how you react under different market conditions, how you handle favorable times, and deal with challenges. This habit will not only improve your trading skills but also boost your confidence and discipline. When reviewing your notes, you may notice certain tendencies, like reacting emotionally under pressure. This awareness can help you avoid repeating mistakes, allowing you to grow stronger with every trade. Rule 6. Control your risk rigorously. Risk control is a critical aspect of trading, serving as a guiding principle that ensures your survival and growth in the market. Before making any trade, define the stop-loss level you're comfortable with and commit to it. Never let emotions override your risk tolerance. Risk control isn't just about setting a stop-loss but understanding your own risk tolerance. In trading, you won't always win, and each loss can bring negative feelings that lead to poor decision-making. Treat every trade as part of a long-term plan. Your goal is not to win every trade, but to build steady profits over time. Rule 7. Be patient for good opportunities. Patience is an invaluable virtue in trading. The market doesn't always present clear, favorable opportunities. Avoid trading just to feel busy or because of FOMO, fear of missing out. Sometimes doing nothing is the right choice. Patience not only helps you avoid unnecessary risks, but also increases your chances of capturing truly valuable opportunities. Many traders struggle with patience, feeling they need constant action to succeed. But remember the example of a patient predator like a crocodile, which observes, waits, and only strikes when the perfect moment arrives. Similarly, waiting for the best entry point maximizes your chances of success and minimizes risk. Rule 8. Take care of your mental and physical health. Trading isn't just a technical challenge, it's a mental battle. Success in trading requires maintaining a strong mind and body. The constant pressure, stress, and market fluctuations can easily make you lose composure. That's why caring for your mental and physical well-being is essential. With a well-cared for body and mind, you can face challenging times without losing control or feeling overly stressed. Develop positive habits like exercising, getting enough sleep, eating well, and practicing mindfulness. These habits will help you stay sharp, focused, and resilient, even during tough market periods. Rule 9. Trust the method you've chosen. Finally, place full confidence in the method you've chosen. On your trading journey, there will be setbacks, and doubt may creep in about your strategy. But don't let these thoughts sway you. Once chosen, stay with it. Success doesn't come from constantly changing methods, but from persistence and stability in the strategy you trust and have tested over time. Think of yourself as a sniper on a battlefield. A sniper doesn't shoot randomly, nor does he get distracted by every minor movement. Instead, he waits for the perfect position, only taking action when the real target appears. Similarly, trading requires patience and absolute trust in your strategy. Thank you for listening to today's podcast. Together we've gone through 9 key rules guiding you to maintain discipline, consistency, and a solid foundation for overcoming all challenges on your trading journey. Success in trading doesn't come overnight, but is the result of perseverance, continuous learning, and a commitment to improvement. If you found this content helpful, please share this video with others on a similar path, and don't forget to subscribe to the channel for more valuable content. Remember, whenever you feel discouraged, you can always return to these podcasts.